Hello everyone, welcome to the Financial Prophet. It's great to see you here. Today, I would like to focus on just one stock. However, investing in this company at the right time, and the right time possibly being now, could potentially make you very rich. So, in today's profit report, we will discuss one of the most underrated, highest quality AI software stocks, SentinelOne. SentinelOne may be one of the most deeply overlooked and misunderstood stocks in the market today. In fact, if there's one company that reminds me of Palantir before it went on its 20x rampage, it's SentinelOne. Of course, S1 is not a monopoly like Palantir, and I'm not saying that it will 10 or 20x in the next 1 to 2 years. Nonetheless, when Palantir was just transitioning from an unprofitable company to a modestly profitable enterprise, its stock got no respect, much like SentinelOne is getting no respect right now. Now, I pounded the table on Palantir when it was still sometimes missing EPS estimates by just pennies. Its stock was still around the $6 to $8 range back then. I feel that S1 is in a similar position. While it's still transitioning to a profitable enterprise, S1 is a top contender in the cybersecurity space and is also an AI leader in the highly lucrative segment. Also, Palantir didn't always trade at 80 or 100 times sales. In its depressed pre-profitability days, it traded as low as about 6 times sales. Incidentally, S1 trades slightly below 6 times this year's sales expectations, and remarkably, below 5 times next year's sales estimates. Now, despite some negative perceptions about SentinelOne's earnings potential, S1 has only missed EPS estimates once, and only by 1 cent since going public about 5 years ago. In fact, the consensus TTM trailing 12-month EPS estimate was 7 cents, yet SentinelOne reported 10 cents, posting a 43% outperformance rate over the consensus estimates. Now, the consensus EPS estimate is for 25 cents in the next 4 quarters. So even if we apply a modest 20% EPS outperformance rate, we could see SentinelOne deliver 30 cents or more in the next 12 months. Nonetheless, the market, it looks ahead. Therefore, we should be considering next year's earnings per share estimates. So the consensus EPS estimate is for 33 cents next year, yet higher end estimates range to over 50 cents. Applying a modest 20% outperformance rate to the 33 cent EPS estimate implies that S1 could earn about 40 cents in EPS next year. This dynamic puts SentinelOne's forward P ratio at around 40, relatively inexpensive for a high-growth AI software company just transitioning into a profitable enterprise. And just for the record, I believe that SentinelOne could actually outperform those estimates and could, achieve between 40 and 50 cents next year. However, to put SentinelOne's ridiculously low valuation into an even more accurate perspective, we can look at SentinelOne's price-to-sales ratio. Also, let's compare it to other prominent cybersecurity players in the industry. So this metric is key because SentinelOne is primarily focused on growth over profitability at this stage. This makes the price-to-sales ratio a better valuation metric than the forward PE ratio in my view. We've seen many companies like Amazon, Tesla, Google, Palantir, many companies implement the strategy of putting growth over profits in the initial transition phase when the company is still focusing more on growth and it's putting more investment towards growth as opposed to focusing on more profitability. And this is why it's very important to look at the price to sales ratio. So SentinelOne trades at 4.9 forward sales estimates. Now, Zscaler trades at 11 times forward sales estimates. Palo Alto Networks also trades at 11 times forward sales estimates, and CrowdStrike has a forward price to sales ratio of 18 here, more than triple that of SentinelOne. So the takeaway is that SentinelOne is just too cheap here. We see that S1 is at least twice as cheap as its primary competitors. technically could double in price and still be less expensive than Zscaler and Palo Alto networks. Moreover, even if its price tripled, it would still be cheaper than CrowdStrike on a price-to-sales basis. This dynamic could make sense if SentinelOne had a faltering sales growth rate trajectory or had some sort of systemic issues relative to profitability, or if there was something else plaguing the company, yet the opposite may be true. SentinelOne has excellent sales growth potential, and it could become considerably more profitable quicker than anticipated, and there don't appear to be any systemic issues at SentinelOne. So S1 has excellent growth potential ahead. SentinelOne is expected to post 20 to 30% revenue growth in the next 5 years or so. Moreover, it could maintain a very healthy 15 to 20% sales growth in the years beyond 2030. In comparison, Palo Alto's growth may only be about 10 to 15% in future years. Yet, its price to sales multiple is more than 100% higher than SentinelOne's. Zscaler's sales growth may be about the same as SentinelOne or potentially even slightly slower. Nonetheless, it too enjoys a price-to-sales multiple of over 100% higher than SentinelOne. The only company that may achieve similar or possibly slightly higher sales growth in this group is CrowdStrike in my view, but price-to-sales wise, it's about 270% more expensive than SentinelOne. So this makes S1's valuation extremely attractive here. And earnings could increase faster than expected. The consensus EPS estimates imply that SentinelOne can achieve a very robust 40 to 60% EPS growth rate in the next several years. Moreover, the company could maintain a high EPS growth rate of 30 to 40% in the years beyond 2030. This dynamic illustrates that S1 likely has a very long and sustainable sales and earnings growth runway. In addition, S1 has shown a tenacity for surpassing consensus expectations and could earn EPS toward the higher end of the analyst estimate range. For instance, in a slightly more bullish case scenario, S1 could deliver about 50 cents in EPS next year and possibly 80 cents in 2027. This dynamic suggests that SentinelOne may be trading at only about 20 to 30 times forward earnings estimates, which is very cheap. Furthermore, if we consider its very robust 50% roughly annual EPS growth rate, S1's forward price to earnings growth or PEG ratio may only be about 0.5 here. This valuation is extremely cheap for a high-quality growth tech stock, as companies in this space could have PEG ratios of about 1.5 and still be considered relatively inexpensive. So where SentinelOne could be going in the future? Let's look at this at my chart estimate here. So we see sales can increase from about 1 billion or 1.01 billion this year in fiscal 2026 to about 2.3 billion by 2030, by fiscal 2030. Sales growth we expect to remain around 20 to 25%, but in a more bullish case scenario, it could go to 25-30%, or possibly in a very bullish case scenario, even eclipse the 30% sales growth mark. Earnings per share, there's a lot of room for growth here. I expect EPS to go from about 25 cents this year to well over $1 to close to maybe $2 by 2030, and the 4P ratio could remain slightly elevated at around 50 to 40, given the company's pretty remarkable growth rate and profitability potential. So I suspect that its price could be at about $25 to $30 in roughly a year from now, and it could probably go to around $80 to $100 by 2030, or it could potentially hit that price target substantially sooner in a more bullish case scenario. So again, I'm implementing relatively modest growth rate and multiples, and I believe this to be about the base case scenario for S1. However, we could see higher than anticipated growth, a higher multiple, and a higher stock price sooner in a more bullish case outcome. Let's remember that tariffs and other transitory uncertainties could be holding back some growth and profitability prospects at SentinelOne. S1 could perform much better as the macroeconomic landscape improves and more certainty returns to markets in 2026 and beyond. Therefore, SentinelOne remains my top cybersecurity holding, and I have a $28 base case 12-month price target on the stock. Thank you very much for watching my profit report. I truly hope that you enjoyed it, and more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe, so I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is Seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have an amazing day.